Hello traders, welcome to this channel. Everyone, if you are tired of guessing the markets, tired of getting stop out right before price moves in your direction, and tired of trading without a clear system, you are in the right place. On this channel, you're going to see everything a smart money concept trader needs. Trade recaps, I will break down my own trades, entries, stops, targets, structure, and logic behind every decision. Full SMC education, from the absolute basics all the way to advanced institutional concepts explained in the clearest and simplest way as possible. Live chart breakdowns, so you can finally understand market structure in the real time. Okay. Backtesting sessions, when we practice identifying liquidity, loss, judge, inefficiencies, and institutional models. My personal trading approach, the same concepts I use every single day. Okay. This channel is not about hype, indicators, or shortcuts. This is about understanding how the market actually works. Throat of ice, institutional order flow. Okay. What is my goal? My goal is simple: to teach you smart money concepts clearly, realistically, and without confusion most traders face. And before we are jumping into advanced stuff, we are starting from zero, because a lot of traders think they know the basic structure, liquidity trends and mechanics and this stuff, but most of the time the foundation is weak. I want you to build that foundation the right way. So if you are serious about learning SMC the right way, and if you want to understand the true logic behind the price, and if you want to stop trading blindly and start trading intentionally, then make sure you stay tuned. Okay. Because in this series I'm breaking down everything step by step from the beginning. So let's start with the foundation. Okay, what is smart money concepts? Smart money concepts is a deep understanding of how institutional traders, the real movers of the market, operate. It explains why price moves the way it does, where it wants to go next, and how liquidity is targeted before major trends begin. SMC teach you that price don't move randomly, nothing happens just because. Every week, every breakout, every reversal has a purpose. Institutions don't use 10 indicators, RSI signals or retail patterns. They use liquidity, market structure, and order flow to engineer the direction of the market. With SMC, you will learn to see where stops are placed, where liquidity pools exist, where institutions tap into orders, and where the real moves begin. Instead of trading patterns, you trade intention. Instead of trading noise, you trade structure. Instead of following the crowd, you follow smart money. Okay. Why smart money is different from retail logic? Retail logic focuses on the what looks obvious. Okay. Support, resistance, breakout, indicator cross, pattern. Okay. So smart money knows where retail traders buy, where they place stop losses, where they chase breakouts, where they get emotional. Okay. So instead of chasing signals and patterns, you understand these things: liquidity sweeps, break of structures and change of characters, order blocks, imbalances, premium and discount zones, institutional accumulation and distribution phases. They know everything, and that's why they trade with a twist. You go from being hunted to understanding the hunter. This is how smart money works. Alright, let's move into the most of important foundations in smart money concepts. Market structure. If you cannot read market structure correctly, you cannot see direction. You cannot understand liquidity and definitely won't know where institutions are entering. So this part is essential. Okay. On the left side of the diagram, you see clear bullish market structure. This is sequence of higher highs and higher lows, meaning price is continuously building new highs, pulling back, but never breaking the previous low. It means bullish market structure. Okay. As we can see, we have higher highs, higher lows. If this higher low breaks this higher high, it means break of structure. This is what institutional order flow looks like when the market is moving upward. If you don't understand these points, you won't understand where the break structure happens, when the trend continues, and where buy opportunities actually form. As we know, guys, we have three styles of moves. Bullish market is consolidation, and moving downside. Okay. Now in the middle, we see consolidation, arranging, and chopping environment. Okay. This is exactly pace where retail traders think the market is doing nothing. But institutions are most active here. Why? Liquidity is building up, retail stop losses accumulate, price sweep both sides, institution prepare for major expansion. Okay. Inside this box, price is not creating a trend. It's collecting liquidity. This is where institutional orders are placed. They're accumulating for a bullish move or distribution before a bearish move. At the bottom, you can see two key components of the smart money concepts: liquidity and institutional orders. Liquidity is every stop loss, pending order, imbalance, and inefficiency that institutions target to fill their positions. Institutions never enter randomly. They need liquidity. They need to opposite side of their trades so they can execute larger orders without slippage. This is why consolidation pace becomes the engine for the next move. The market really handing up, collecting liquidity, and then preparing for expansion. On the right side of the diagram, we see opposite a clean bearish market structure. This is sequence of lower lows and lower highs. The market is consistently printing new lows, pulling back, but failing to previous highs. Okay. This is institutional selling pressure pushing the market downward. If you cannot recognize these structural transitions, you will miss break of structures, trend continuations, high probability sell setups. So there's three phases: bullish structure, consolidation, and bearish market structure. Form the language of the market. If you can read this language, you can understand where liquidity sits, where institutional money enters, and where high probability trades appear.